Welcome to Ripple Edge, where I makes your sabres ICAS, where we cut through the noise and give you the real picture on XRP. Let's get into it. Every XRP price prediction you've heard this week is wrong. Not because the numbers are impossible, pois tipre pourcras akenstikish wodir eshrokikentases, and not but because nobody is telling you which ones are grounded in something real and which ones are pure fantasy dressed up as analysis. Today we fix that. We're going to run through the full spectrum from $7 to $100,000, and by the end of this, you'll know exactly how to think about each number. And also sign it as and more importantly, why most of the people throwing these figures around don't actually understand the asset they're predicting. If this is your first time here, hit subscribe right now. We move fast and we don't repeat ourselves. Let's start with the number that got the most attention this week. Jake Claver is calling for 4 digits on XRP by end of 2026, specifically $1,500 to $2,000 per token. Now before you either celebrate or laugh, let's do the math that nobody else is doing on this. At $2,000 per XRP, with the current circulating supply sitting around 58 billion tokens, you're looking at a market cap north of $116 trillion. For context, the entire global stock market cap right now is roughly $110 trillion. So, Claver's 2026 price target would require XRP alone to exceed the combined value of every publicly traded company on Earth. That is the actual number. That is what you need to understand before you decide how seriously to take the prediction. Now, here's where it gets sharp. Claver himself is attaching conditions to this call. He's saying liquidity has to flow in, regulation has to land, and adoption has to move. He's not saying it happens in a vacuum. And that matters because those conditional factors are actually real variables in play right now. The Genius Act, the Digital Asset Market Structure Bill, and the broader regulatory clarity coming out of Washington in 2025 and into 2026, these are not hypotheticals anymore. The legal framework is being built. The question is whether it gets built fast enough and whether institutions respond at the scale Claver is projecting. On that question, the honest answer is we don't know yet. But here's what they won't say on the channels that just clip Claver and cheer. Syrkish cheer, workmasainidans, for XRP to reach $1,500 in 2026, you would also need a dramatic reduction in circulating supply. The only credible mechanism for that kind of supply compression in the short term is aggressive DeFi utilization, specifically through protocols like flare locking XRP as collateral at scale, combined with Ripple's own escrow releases being absorbed faster than they hit the market. Next stage stamp. That is a very specific set of dominoes that have to fall simultaneously. Possible? Yes. Probable by end of 2026? The math makes it a heavy lift. Now, let's talk about the BlackRock ETF angle, because this one keeps circulating and the details matter. And means. The claim being made in several circles right now is that BlackRock has a secret XRP spot ETF in preparation. Here's what's actually documented. In November of 2023, a filing appeared in Delaware for an iShares XRP trust linked to BlackRock. Bloomberg confirmed it was fake. Not filed by BlackRock. What's also true is that when Brad Garlinghouse and Larry Fink have both been asked directly about an XRP ETF, neither has denied it outright. Both have deflected. That's not nothing. But deflection is not confirmation, and a 2-year-old fake Delaware filing is not a pipeline. The real play here is this. BlackRock will launch an XRP ETF when the regulatory environment makes it the lowest risk, highest demand move for them institutionally. They are not sitting on a secret. They are watching demand signals. And the signal they need is sustained institutional appetite, not retail speculation. When you see sovereign wealth funds, pension allocators, and treasury desks publicly positioning into XRP infrastructure, that's when BlackRock files for real. We are not there yet, but the direction is correct. Now here's the chart edge. Pull up XRP against total crypto market cap dominance over the last 2 years. What you'll see is XRP's dominance percentage breaking out of a multi-year compression range that began around mid-2021. That breakout started in late 2024 and has been holding. Historically, when XRP dominance breaks structure like this, it precedes significant price discovery phases within 6 to 12 months. That pattern doesn't guarantee a number, but it does suggest that the macro setup for a real move is more structurally sound right now than it has been at any point since 2000. Wiki Corsi 2017. That's the edge most people aren't tracking. Let's cut to the AI price model story because this one got a lot of traction and deserves a clear-eyed read. The claim is that Alibaba's AI model, loaded with historical crypto data, spit out a 2026 XRP forecast of $7, with a secondary analysis pointing at $42 based on institutional adoption signals and Ripple's expanding partnership network. Here's what you need to understand about AI price models. They are pattern recognition engines running on historical data. They are not forward-looking fundamental models. When you feed an AI years of crypto price history and ask it for a forecast, it is essentially telling you what past cycles suggest. It cannot account for a BlackRock ETF filing, a new ISO 2022 mandate, or a geopolitical liquidity event that hasn't happened yet. $7 is a conservative extrapolation of current momentum without breakthrough catalysts. $42 starts to price in some institutional movement. Neither number is wrong. Neither is a ceiling. They are baseline scenarios, not predictions. Now the 589 conversation. This number has become almost mythological in XRP circles, and it keeps getting recycled every time there's a legal clarity update. Here's the honest framing. The Ripple SEC case resolution did remove the single biggest institutional barrier to XRP adoption in the United States. That is a real structural unlock. Dormant partnerships and Meisterrechtssicherheit is doorrekorden CSA and there are documented ones thing now have legal cover to activate on-chain XRP settlement. Whether that activation drives price to $589 depends entirely on volume and velocity of those partnerships going live simultaneously. The regulatory clarity is real. The partnership pipeline is real. The price number is a projection, not a guarantee. The $100,000 prediction is the one that needs the least time but the most context. The argument being made is that XRP becomes the primary collateral layer of a restructured global financial system, replacing or augmenting the role of sovereign debt in institutional balance sheets. In that world, holding XRP is not an investment. It is a reserve position. And in that world, the price is set not by speculation, but by the capital requirements of the institutions using it as collateral. That is a legitimate long-term thesis. It is also a thesis that requires a fundamental restructuring of global finance that has no confirmed timeline and no single trigger point. If you believe that thesis, you hold and you do not sell at $20 or $100 or even $1,000. If you do not believe that thesis, the $100,000 number is noise. Know which camp you're in before you make a single portfolio decision. Here's the bottom line on all of it. The real play is this: XRP has a stronger fundamental case in 2025 than it has had at any point in its history. The legal overhang is resolved. The regulatory framework is being built in real time. Institutional interest is documented and growing. The on-chain utility, Skransurak Getsats, Yazdakisa Yassistin, Wakaknin Rainsin Runshe, rates cross-border settlement, tokenized asset corridors, DeFi collateral, and Steskin Astakros, Estaja or Zaintipsoi Berchiotining Bansem Breshnaishek. The question is not whether XRP goes up. The question is whether it goes up on a 2026 timeline or a 2030 timeline. Claver's 1500 to 2000 requires 2026 to be a historic year for crypto liquidity inflows. 7 to 42 is what a measured institutional ramp looks like. Wakias Cherokines, Suraborg. 589 is somewhere between those two worlds if partnerships accelerate faster than the base case. Yes, science, US, and South science. And 4 digits by 2030. The restis but creates des Yell Crestas Ain Friday the 30 is probably the most data-supported long-term target on the table right now. Not because it's conservative, but because the infrastructure build required to justify that number has a realistic multi-year runway. Cut the noise on the fantasy numbers. Anchor to what the math actually supports. track supply dynamics, dominance breakouts, and institutional filing patterns. Those are your real signals. Everything else is a headline. That's your short course. What's that? That's the edge. Stay sharp. Subscribe as say, and subscribe so you catch the next one before everyone else does.